between if they want to do me on Bloomberg and stacked photos. I don't even have to.
And we're back. We're live with Matt Maley and IT support, i.e. his teenage son. Matt, what's your son's name again?
Peter.
Peter, how's it going, brother?
It's going well. How are you?
I'm doing great. Is your dad ready for this?
He is.
All right. I'll take your word for it, Peter. Matt, for the uninitiated, would you mind giving us a brief introduction to yourself and what the folks might learn from you today?
Sure. I've been on Wall Street for well over 30 years now, and right now I have a couple of roles. First of all, I'm the chief market strategist for Miller Tabak, and you may have seen me on CNBC. I was on yesterday. It's on Bloomberg Radio this morning, and so we talk about the macro part of the world, but my background is much different than most strategists, is because I was a trader for many years, talking to some of the biggest trading desks on Wall Street, whether it be hedge funds, mutual funds, insurance companies, etc. So it gives me a much more unique view of what's going on in the marketplace. And my other role, of course, is I write and edit two market letters. One, the Maley report, both are from Benzinga, and the other is the Benzinga Stock Pickers report. So it's just a way to use my experience over the years and use it in a very unique way, because the traditional fundamental analysis is very good and very important. But as a trader, spending 25 years in trading before I became a strategist over 10 years ago, I really just focus on what is happening and what is going to happen, not what should happen going forward. And I think that's a way to maximize your returns and really know what's going to happen. And when I do that, I use not just traditional fundamental analysis and not just traditional technical analysis, what some people do. Most technicians, they just look at the charts. That's all they care about. I like to blend both because it really helps people, I think, again, maximize their returns. You can turn, and also for more active traders, they can have one bucket where they have, real long-term 3, 5, 10-year horizon. And they can have another bucket where they, in some cases, invest in those same names and trade around their positions and really, like I said, maximize those returns and get some key turning points and build on the momentum. And that's really what I'm going to try to convey today, is give an idea of, talk a little bit about the basics of fundamental analysis. I think a lot of people have a good idea on that. And again, same thing on some basics on fundamental analysis. And I'll show you some charts, some of which actually have nothing to do with Cleantech, but those will just be very brief. They're just to show you what kind of charts, for instance, when a trend line is broken and when an RSI chart gives us a signal. But then we'll move and talk to and look at some actual Cleantech companies, the charts on those companies, and how it can, when you blend the two types of analysis, you can really maximize your returns.
Beautiful. All right, let's hop right into that presentation, Matt.
Sounds great. Now, the one thing I just want to start off with is to say that too is it's interesting. If you're listening here, you're almost certainly somebody who believes in global warming and the issue there. But sometimes, if anybody says to me, "Well, I don't believe in that stuff," and you say, "Well, who cares?" If you're looking to make money, that's the way the world's going. We are moving away from fossil fuels. If you don't think fossil fuels are hurting the environment, that's fine. But I'm telling you right now, we're moving away from those. And so the companies that are coming up with the new technologies to move us beyond fossil fuels, they're the ones that are going to make a lot of money over the next 2 years, 20 years, 50 years, etc. So they should be paying attention to it. But anyway, again, we want to talk about using them all together. Now, again, fundamental analysis is very, very important, but whether it be for the overall market or individual stock, there's other things that are involved. I mean, first of all, the fundamental analysis, different people have different opinions on what's the most important thing or what's really going to happen going forward. And then, of course, we have a situation where people have different, they have different fears, they have different hopes. We see when the markets fall out of bed, people get very fearful and they sell stock at the absolute worst time. So it's really good to use other areas of the market as well as just fundamental analysis because, as we've learned many times, the one thing, let me step back a second and just say, one of the old sayings on Wall Street is the market is always right. Well, that is the worst saying on Wall Street. It is not true, at least not in the near term. The market is not always right. it's only always right eventually. Okay, and when all you have to do is what happened in 1999 and 2000. Was the stock market right then? Of course not. Was the stock market right when the market was flat on its back in 2000 and the March of 2009? No, it was very cheap and very undervalued. The market was really wrong then. So we want to be able to use some other issues rather than just fundamental analysis to help us determine when the market is out of whack with the underlying fundamentals, and that's how we can really maximize our returns. And the only other thing I always like to talk about is Amazon. I mean, was the market right about the price of Amazon in the early 2000s when it was trading at $6? I don't think so. I mean, okay, maybe its fundamentals weren't as strong as they are today, but they were a lot better than a $6 stock. And so we really, it's a good way to combine these two things and really, again, to get what's really going on in the marketplace, not what should go on in the marketplace. Now, just to talk about the difference between the two, I mean, for a lot of people, it's like, well, they're completely different. There's nothing about them that's the same. Well, I mean, most of it is accurate, but not all of it, because some technical analysis is fundamentally based. And think about it for a second. I mean, if you have a situation where if you have a company that is it's been having a tough time for a couple of years. Okay, they've had to lay off people, they've had to close some factories, so they're really having a tough time. But as we all know, and we've all heard many times in the past, the market moves 6 months in front, at least 6 months, 6 to 9 months in front of the economy. When we're coming out of recession, the stock market rallies before we're out of recession. When we go into a bear market, it usually happens before we go into recession. And same things happens with individual stocks. Well, that's just not by coincidence. There's a reason behind it. And going back to that example I talked about with that company was having a tough time. Well, all of a sudden, this company, widget company, suddenly things are getting better. Well, what are you going to do? Well, great. We're going to go rehire all those people. We're going to retrain them, and we're going to reopen those factories. Well, guess what? That's going to take time. You can't do that overnight. But you can buy a stock, right now, tomorrow, whatever. And we have these professional investors who have they have armies of analysts, whether it be a hedge fund, big mutual funds, whatever. You've got this army of analysts. They're going to find out that widget company, things are turning around. And the analyst is going to come into the portfolio manager and say, hey, things are going to get a lot better for this company. Don't wait for their earnings to get better, because it's going to take them a while to hire those people, train those people, and reopen their factories. Their earnings aren't going to turn up for another 6, 9, maybe 12 months. Buy it now before that happens. Get in front of everybody else. And that's why when we see a stock moving up, technical analysis allows us, those of us who don't have an army of analysts to help us out this way, to get into those stocks at the right time. So it's very important to realize that they are intertwined more than I think a lot of people understand. Now today in this whole the clean tech. All the presentations you've seen today, you've gone over the overall stories. Now, I'm not going to go too much into this fundamental analysis. First of all, I don't want to bore you to death, but the overall story is usually the most important. What do you believe in? And when it comes to clean tech energy, or whether it be energy or technology, whatever it happens to be, that's the number one thing. You want to believe in that story, that something off in the future is really going to change the world or help change the world. But of course, we do have other traditional fundamental analysis, and I think most people know that. And I'll just go over it really quickly. Again, I don't want to take too much time, and some people may know this all very well. But just a couple of basics, like the earnings per share. I mean, everybody knows. Oh, yeah, well, of course, earnings are important. Of course, they're important. But we just need to know that you have two companies, Company A and Company B. They both make $10 million, but Company B has 5 times as many shares outstanding. Well, that means, so therefore the stocks, you'd think, well, if they both have the same kind of revenue, same kind of profits, they should be trading at the same price. Well, not if one has a lot more shares outstanding. So it's a way to compare apples to apples. And then, of course, valuations. They're very, very important because we want to see what's going on in the marketplace. Everybody talks about multiples, the PE ratio, how many times earnings that a stock or a market is trading. I'm going to talk a little bit today about price to sales on a couple of different stocks of clean tech stocks, because that's really even better, because you can't really monkey around with sales. Your sales are your sales. That's it. That's your number. All right, and when you have earnings, there's things you can do to kind of jiggle around with that. So that's a little bit tough. But again, and valuations can change. And again, for clean tech energy or any kind of something, any kind of area where you're really looking towards the future, that growth area, you're willing to accept higher valuations because there's something at the end of the rainbow that's really those earnings are going to rise to meet those valuations. But if you have a utility stock, I mean, their profits are dictated by the government. They're not going to make any more money. The reason why you buy utility stocks is because they pay a good yield, and that's always good to have. Have income is a good part of anybody's portfolio. But in this clean tech energy, that's why the reason why I really want to highlight this is that some of these stocks might become very highly regulated, just like utilities are. And so as you're going through this process and you're buying stocks, you may own stock for several years and then realize this might run into some areas of regulation I don't like, and then you take profits in the name. But again, because when you're in a utility, again, you're guaranteed profits, but you could also, everybody has to have electricity, so you can charge whatever you want, and the government comes in and says, we're going to limit how much you can charge. And obviously, there's macro analysis when you're looking at the overall economy. Is it gaining or is it not? And the last thing is to really talk about a fundamental analysis. And again, we could talk about a million things and talk about it for hours, but correlations. And again, this can be very helpful in the clean tech area. Number one, I mean, for instance, well, all correlations are interesting. One I'm watching right now is the price of lumber. It's gotten incredibly overbought on a technical basis. We'll talk about technical analysis in a second, but very overbought. So it's really ripe for a pullback. Well, the correlation between lumber prices and some of the housing stocks, especially like a Home Depot and a Lowe's company, which are correlated to the price of lumber, though both of those stocks are also overbought. So they're ripe to come down. And if I'm a buyer of Home Depot, and I love that company long term, I don't want to be buying it here. If anything, I'd be making a negative bet. So if you like it, say, I'm going to hold off and let that come back down to me before I buy more. So these correlations are all very helpful as well. So let's talk about the technical analysis. Again, I don't want to spend too much time on it because I think you've already had some of the presentations that's dealt with that. But I talked about how technical analysis is fundamentally based, but it's also momentum based. That's really one of the key areas of it. In my work, I like to use those both fundamental and technical analysis to find the key turning points. But for most technicians, they're really looking for that middle 70%. You're looking for confirmation in either direction to help you really make money. But it's very, very helpful. It's going to go something I'm going to mention a little while further about how to trade and how to really invest using these two things to really take advantage of it, because too many people like to buy things on weakness and then buy more on weakness, where they really should be saying, I want to buy here and I want to buy more when it goes up. Too many people waste time and waste money by saying, oh, I wish I had missed it. It's like, it's okay. It's okay to miss some of it. You wish you had bought more. We always do. Don't be afraid to buy more at a higher price. More on that concept a little bit later. So let's just talk about a couple of basic points. Moving averages, you hear about it all the time. If you listen to CNBC or Bloomberg or Yahoo or whatever the TV financial news you get, the 200-day moving average is a big one. The abbreviation is DMA. The 200-day is really about a full year of trading. If you take out the weekends and holidays, not exactly, but it's about that. 50 days, about a quarter. It's actually a little bit more than a full quarter. But again, that's another one that people like to watch closely. And the 20-day is something that short-term traders like to look at. And I was going to say, this is not a clean tech stock, but just look at this stock in Bank America. Look at that 200-day moving average. That's what this purple line is. It was key resistance, key resistance, key resistance, key resistance. It finally broke it, and it just took off. And then you see that happens. I cannot tell you how many times that happens with the stocks. The 200-day moving average isn't always for every single stock, but it can be. And this is the kind of situation we're looking for, that whenever we break a key moving average. Another thing, of course, one of the most important things is trend lines. Because obviously something's trending up and it breaks below that line, it indicates we maybe have a change in trend, and just the opposite on a downward sloping trend line. But I also just want to take this opportunity to point out that no matter what, whether it be a trend line, a moving average, any kind of support and resistance level, you always got to make sure that we get more than just a slight move above or below that line. So those, you can create head fakes. So if you, oh geez, I have key resistance here at $52.50. Well, if it gets to $52.60, that's not enough. We get head fakes all the time. You'd like to see, I like to see at least 2% of a move above or below a support and resistance level to really get confirmation that the line has been broken. A lot of technicians like to look at 3%. However, we also look at, for instance, a stock like Tesla, which is so wild and so volatile, you like to see maybe even more of than 2 or 3%. But that's kind of the key thing. My point is that it's just a few pennies, or even just a 0.5% or even 1% above or below a line is really not enough to get you going. But look at this here. Here's a trend line, and we all know how interest rates have risen this year. Here's the trend line on the 10-year Treasury note, the yield of the 10-year Treasury note. Look at that. It broke above it. There's a little bit of a head fake, came back down, but now it's finally starting to break meaningfully above that line. That's a good signal that's going to go higher. Well, guess what happened next? Bang. It just shot straight up. See how much it just took off once we got confirmation that it was broken, that trend line. It just shot up, and then just nothing moves in a straight line. But it really showed you how well that can really work. Now, one of the other things we talk is about higher highs and higher lows, and vice versa, lower highs and lower lows. It's one of the most important things in momentum, because again, technical analysis has a lot to do with momentum investing. And when you get confirmation, when you get a series of higher highs and higher lows, that's very bullish. And then if you say higher low, higher high, higher low, higher high, and then you get a lower low, that's a big warning flag. And the same thing in the other direction. So that's something we got to look for very carefully. And this is one of the stocks, the reopening stocks have obviously done very, very well. Darden Restaurants, and it's they own a number of different chains in the U.S. And just look at this. You can see higher high, higher low, higher high, higher low. Same thing, all the way up, all the way up. And that's what we've been doing here. It looks like it's going to make another higher high, but we don't know. Now, I don't have on here, and I'm going to talk about in a second, is the relative strength index, an RSI chart. I'll talk about that in a second, but it's getting overbought on that chart. So I'm really starting to look and say, well, we're going to get another higher high. It's getting overbought. Look at this great run. Maybe we should take some profits. Well, it's probably a good idea to take some profits here. But if it breaks below this level, you definitely want to take some profits, because it's broken that chain of higher highs and higher lows and making a lower low. And that means that it's basically the stock has gotten washed out to the upside, that where the buyers have basically gotten worn out, and there's nobody left to buy the stock. And I know that sounds kind of crazy, but as we all know, stocks can get way overbought and way oversold. And even though their fundamentals remain strong, they can still see deep corrections. And you don't want to be buying stocks. I mean, if you're not an aggressive trader, you don't necessarily have to short or buy put options, but you definitely don't want to be buying. And you can time the market in an intelligent way. All those people say you can't time the market. No, you can't time it perfectly, but you can do it in an intelligent way to really maximize your profits. Now, the last thing to really talk about on the technical analysis is this RSI, Relative Strength Index. And again, it measures the speed and strength of recent price movements. So you can really say, is it getting way ahead of itself, or is it getting or if it's getting getting oversold, getting washed out? And as you'll see on the charts I show, when it gets above 70, it's becoming overbought, and below 30 is oversold. The thing is, though, is that, again, going back to that example of Tesla, some stocks that are really volatile, you want to see them go way above 70. You want to see it get above 80 before you get you get cautious on the stock, and you want to see it get down towards 20 on an oversold level before you really load up on a big way. And again, because those are more volatile names, they're going to swing a lot more. But for most names, you get much above 70 or much below 30, those are usually good entry points. Okay. Now, again, here's a couple of examples, and then we'll move on and try to pull this all together into the clean tech area. But here's a stock, Viacom. You may, a problem with Archegos, that family fund, or the mutual hedge fund that blew up. Well, here's on our Benzinga stock picks, and on level 2, I picked this as a short, because look at this. It almost got to 100. It's 70. See that red line? It's a red line because it says stop. When you get above 70, stop. Don't buy it anymore. Well, guess what? It got to 90, almost to 100. I said, you ought to short this stock and buy puts. And our tier 3 level, buy puts. Well, guess what? The stock went down 63%, made a 63% profit. And in the options, you made well over 2,500% in just a couple of days. Now, I'd love to say that we get these the kind of picks like these every single day. We don't, but it does give you some great opportunities, because you see back in here, it got overbought. You can just see it's glaring how ridiculously overbought it was. That was one where you don't get very often, but it was like shooting fish in a barrel. And then just the other side where the RSI got below. You see how it got below 30, well below 30. This is in Tesla back in June of 2019. I started pounding the table on the stock saying, you got to buy the stock here. It's down here below $40. And it went up 2,200% into the beginning of this year when I finally turned bearish on it, when its RSI chart got incredibly overbought. So that's just kind of hopefully there's a little bit of a background. I hope I didn't go too long on that. But let's look at some Cleantech charts and see how we can kind of pull this together and how we've been able to do it. Now, the first one I'm just going to talk about real quickly, where we use a couple of different of those technical things that I used that really can help you trade around. Again, you have that bucket. Geez, I really like Brookfield renewable, but I'm gonna have an X amount of dollars here. I'm gonna take 10 or 20% of that and trade around it to really maximize my returns. Well, look at this. Here's the stock. We looked at the RSI. It got very, very oversold down here. So I bought a little bit of stock. Okay, then what happens? Well, I bought a little bit more when it got above its 50-day moving average. Because see, look at this, how that 50-day moving average was key support for all that time. When it broke below it, it got absolutely crushed. Well, whenever an old support gets a key old support level gets broken, it becomes new resistance. So you added to the position up here, and it just kept on going. But look at this now. Wait a minute, Matt. It got very overbought here. Wouldn't you want to sell it here? Well, no. Why? Because it was holding its 50-day moving average, okay? And it was breaking its most important, its all-time highs. So it wasn't even making a higher high. This one was a little bit of a head fake. This one was a severe one. And look how far it rallied after that, okay? And then you sit there and go, well, it got really overbought again. Well, this time it didn't make a higher high. It failed. So this gave us a good signal to say, maybe I had to take some serious profits up here and trade around that situation. Okay, before we go too much further, and I've got several more charts we can look at, but we might interrupt for some questions and stuff. But I do want to go back to this issue where I talk about adding to positions on the way up. Don't be afraid to pay up for more shares. Now, I'm not talking about if you go into a stock and say, geez, I bought it at $50 and I wanted to buy 300 shares. Well, I bought 100, I got a little nervous and I just held off, and it went down 50 cents and I bought another 100. Oh, that's fine. I'm not talking about that. I'm talking about, hey, I got some money in, I'm going to put it to work. I really like this stock. I'm going to buy it at $50. And I bought, and then all of a sudden the stock starts moving up. Well, then a month later, you get some more. Maybe it's because you get a new paycheck, whatever it happens to be. You get some more money in. It's like, what am I going to do? The stock's run to 60. I missed it. I wish I had all that. Don't be afraid to buy the stock at $60. Okay? Don't be afraid to add. You have not missed it. Okay? Let it run. And you think about it, because if you do just the opposite, geez, you bought it at 50, and it goes to 40. What's going to happen? I mean, throw it here. You add to a losing position, you still have a losing position. Well, that sounds pretty obvious and kind of ridiculous, but it is. I mean, so you bought it at 50, you bought it again at 40. Now your average price is 45. Obviously, right in the middle there, and the stock's trading at 40. Okay, you're out $5. You're down 10%. What good is that? I mean, that's not great. So I would say is that when you lose that much money, it's like I never lose more than 10%. You lose 10%, you're out. You're out, and you look for another time to get back into the stock. But if you buy it at 50, it goes to 60. Your average price is 55. This price is trading in. You have a profit, and all you can do is use a stop out level, which means that when it gets to that level, I'm going to sell it no matter what. A lot of people use stops to limit losses, and that's what I said. Use a stop level because I never want to lose more than 10% on an initial trade. Obviously, if you own Tesla at $20 and it goes to to 600 and it goes down 20%, that's okay. But I'm talking for initial thing. Once you've got a profit, you want to maintain that profit. If it gets down to $55, that's your price. You get out, no harm, no foul, especially in today's markets where you don't have to pay a commission. So you haven't lost a thing. But as the stock goes up, you just keep trailing that stop higher. It goes higher, higher. You can add a little bit more as it goes up. And maybe the stock goes to 500 and you keep raising that stop out price, but maybe with a little bit more of a lag because you have a profit. But I hope that makes sense. I just say that so many people kick themselves for not having bought more. It's okay. Don't be afraid to buy, add to something. If you believe in the fundamental picture and it has the momentum, let it run, and don't be afraid to add to it. So let's talk about these clean tech stocks, because right now a lot of these names have gotten burned, have gotten hit pretty good in the last several months. And so people are thinking, oh my gosh, so what we do, I believe in it long term, but I don't want to get run over either. So I'm not really sure what to do. And I believe, like I said, believe in the long-term story. I believe in the fundamental story, but we also understand that we're early in these names, that there's going to be some volatility. And I know I can't pick the exact bottom, but I don't want to get my clock cleaned and be down 50% right away. And of course, the way I trade it, you'll take the loss before that happens. But the point is, this whole group right now has gotten hit pretty good, and technical analysis is going to allow us to pick some good spots. Now here's Ormat Technologies. So this is, I've already talked about Brookfield. I'm sorry. So this is company. I mean, they're big. It's they're big into geothermal energy. Okay, now they really go in. It's renewable because the Earth is making its own energy. It's heat. Under the ground has been doing it for millions of years. It will continue to do it. So this is it's a lot different than a lot of other whether it be wind or solar or whatever. But this has been an interesting stock. But look at this stock, how you've been able to trade it. Okay, here's a stock where, again, it's had this recent sell-off. And so what do I do here? Well, look what you were able to do beforehand, okay? If you bought it, if you say, I like the stock here, it's going down, I don't know what to do, it's kind of trading sideways. We know why it got hit here. That was because the whole stock market went down. There was nothing to do with wrong with the company. The whole stock market got crushed because of the coronavirus. But it didn't really bounce back. It got stuck here. But here, it didn't make a lower low. See, you can say a very slight one, more of a head fake. That's more like a double bottom, which is very bullish. So I like this fundamental story. So I'm going to buy it here, but I'm not going to buy it all. I'm still a little nervous about it. Then it got up above here, or it broke out to a higher high, but only a slight one. Oh, looks like it's a head fake, and then it pops back. Then you add to it when you get that confirmed breakout. Here, the stock came back down. It held that old resistance level. Is now new support. It held it and broke back up here. Now you've bought it in two different places, and it breaks out again. You buy it again. Okay. Now you've got a real nice position built up at several different prices. Yeah, you wish you'd bought it all right here, but you know how many people did that? That would be nobody. Don't worry about that. Don't and then of course the stock takes off. When you double it, it more than doubles from where we first got in. You take one of the rules for most stocks is you sell half, because then you can't lose any money. You sell half, that means you get your initial investment back and you write it out. But so what do we do now, though? Going back to the initial point, the stock has come down a lot. Well, now we have a good idea of what we want to do. Okay, now say you're not in the stock, you don't know it now, but you've just learned about it. It's had this great move, but boy, look, it came back down. I'm really nervous about I don't want to get in now and have it go back down and retest its lows from 2020. So that's great. So if you like the fundamental situation, you nibble on it here, you buy a little bit, and you have your stop out level right down here at about the 74 level, and you take a small loss. You're going to have losses, okay? That's all about investing, trading, investing, whatever. You're going to have losses. Warren Buffett, I don't care who it is, they'll all tell you they've had plenty of losses. The key is to minimize them. That's probably the most important thing about investing and trading, is to minimize your losses. You minimize that loss. So you buy a little bit here, but if you break above that level, okay, which is right here in about the 83 level, then you add to it. And then you add to it again if it breaks above this level, because look how it broke above it twice here. And believe me, if it breaks above here, breaks above 90, it's going back to this level, okay? And that's going to be a real nice, you're in a very quick time, you're going to make a lot of money on a very short time frame. So again, this is a way we when we believe in the story, and then we can use technical analysis when things are really dicey to really give us an idea of give us more confidence in what we're doing. Now, here's the same thing. I'm sure a lot of you heard about the Chinese electric vehicle maker here. These guys, they, like most other of these names, have gotten hit lately. But see now here, so when the stock came down, it's like, so what do I do? It got oversold here. We saw its RSI down here. I hope you can see my arrow. It's not overbought, certainly. It's worked off. So what happened? So it got down to almost its 200-day moving average. But this looks like it's just the only reason why it bounced a little bit is because it become oversold. There really wasn't any good news. It just become oversold, so it bounced. It made a lower high. That's not good. But look what it did here. It did not make a lower low. Okay, another lower high, that's a concern, but again, did not make a lower low. So we'd see now we have a good level here, right here in this, just below 35, about 34.50, where we see the buyers come in. Okay, I didn't draw it here because I don't have too many lines out here, but you can see it's holding its 200-day moving average. It's not making a lower low. So I'm watching now to see if it can break above that level right here. Okay, that's basically just above $40. That's where I'm going to buy the stock. And then I'm going to add to it again after it breaks above this level, because it's going to shoot up to here very, very quickly. Again, not overbought, so that gives us a lot more comfort. But we get above this level here, which was right at the very beginning of April. I think the first day of trading of April. We want to get above that high, just above $40. We're going to like that stock. This is a very similar one. I don't want to keep. It's the same thing. 200-day moving average. We're looking to see if it can break above that level. It's not overbought. Again, Nova Energy. And the last one's just a little bit different here. Same type of situation, though. The stock has gotten hit hard, but when it came down, it did not break its trend line. So now we're using a little bit different. Before we used the moving averages, we used higher highs and higher lows. Well, here we're going to use the trend line. It held the trend line there, held it there, held it again in the middle of the month. Now, I didn't draw it because I didn't want too many lines, but it's broken above its short-term trend line. It held its longer-term trend line, broke above its short-term trend line, and is now making a nice higher high. That just happened today. I want to see tomorrow, make sure it holds that, we don't get a head fake. But this one looks really good, and of course, this RSI chart, again, not even close to being overbought. So that's really the gist of my presentation. Try to keep within half an hour. I think we succeeded in that, and we can go on further, maybe take some questions, and again, it can be on clean energy, specific clean energy stocks. We can talk about technical analysis in general, fundamental analysis in general, different aspects of the broad market in the broad market indices. But I'll leave it wide open. I don't know if Neil's there. Okay. All right. Well, he's not there, so I hope I'm on. I don't think anybody sent me anything.
Did you need me, Matt?
No, I just I kind of went through my presentation. Sorry, Neil, and just know if people had some questions, or we can talk about a better way, or the way I kind of look at things of combining some of these technical views to really get
I think let's hit some tickers.
Okay.
So go ahead and while you're go ahead and work on switching your screen. Right now it's just the presentation.
Can you see my Bloomberg now?
No, right now it's just the presentation.
Okay. Now I got to figure out how to do that.
So you're going to want to end your share, end your share.
Okay, and stop sharing. There we go.
There you go, and then restart it and do the same thing you did before, but do it for your Bloomberg now. I
see. Okay, share screen.
Matt uses a Bloomberg terminal. He's got a big boy app.
How do I get that over onto? I don't know how to do that. I'm sorry.
It's all right. Just hit share and then share your screen and then open Bloomberg.
Well, it's open. Let's see here.
Now you have to click share on the bottom of StreamYard again. Okay, so now I see your stream, or I see your screen. So drag Bloomberg over onto the screen where you see you and me. There you go.
Okay, see it. Great. Okay. There's, by the way, for those who care, that is the chart of Bitcoin. And you see, it's broken below its trend line, and it's testing its late March lows. If we break much below this tomorrow, especially break below 50,000 and close there, that's going to be a problem near term, short term only. I'm not saying I'm a non-believer in Bitcoin. I'm just saying on a technical basis.
They will attack you if you don't believe in Bitcoin, Matt.
Believe me, I am very bullish on Bitcoin on a long-term basis. But we do know that it sees every single year it sees deep corrections of 30% or more, and if it breaks below that, we're probably going to, it's a good chance we go down to this low, down in the low 40s. That's okay. It's going to just present another great buying opportunity. But just be aware that it is at a key support level, and how it trades tomorrow is going to be very important. And I don't want to spend too much time on this because I know you guys want to talk about other things, but don't be very careful about what happens over the weekend, because it's a much more thin market. If the thing really gets crushed on the weekend, don't be so worried, because it's a very, very thin market. And the same thing, if it bounces back in a major way, I really like to follow it much more carefully how it trades Monday through Friday.
Mm-hmm. That's a really good point about the market participants during the weekend.
Yeah, it's one of the few things, basically the only thing that trades over the weekend. I mean, even oil stops trading over the weekend. So,
Matt, there are so many cryptocurrencies. You're going to get you into the world of cryptocurrencies.
I shouldn't say Bitcoin. Cryptocurrencies are the only things that trade.
Yeah. Okay. So we've got some tickers. So do you want to go through them? I don't know. ENG, was that one of your recent picks? Oh, you're back to your presentation. Let's go ahead and close that. Just go ahead and click it.
There you go.
There we go. Was ENG? I don't even know that name. Is that one of your picks?
It was not, but let's just throw it up and see how it looks right now. Okay.
What is this?
Oh, you didn't even know what it is. There you go.
No, yeah, I don't know what it is. This is coming from chat.
Okay. There you go. ENG Global.
All right.
And let's go. So again, I'm just going to pull up its RSI chart again, the relative strength index. Okay. Now look at this stock. It's we got some issues because it's been under some weakness. I'm going to take a couple of these moving averages so it's not so cluttered up there. But there's a 200-day moving average, and you see, even though it did drop below it, it didn't fall very far below it. So that's should provide some excellent support. And you see here, it made a little bit of a lower high, lower low, lower high, and then it looked like it was going to hold up, lower low. It looks like it wants to go down and test its 200-day moving average. Now see how the RSI is getting oversold, but really not extremely so. Look what it did down here. This is when so if you see it dip below, so again, I'm thinking the stock's probably going to get down to that 200-day moving average, which is $2.82. So that's kind of what I'm looking at. I can also look at the MACD chart. I don't want to. Again, this is another one where you have. I didn't talk about it in my presentation. It looks like it's trying to curl up, but we've had a few head fakes. And what a MACD chart is, it's kind of like a golden cross on a short-term basis. When it sees a positive cross, it's just like a golden cross when the 50-day moving average breaks above the 200-day, and then when it breaks down as a death cross. But anyway, we get a little bit more there. Then it breaks above $4. That'd be a little minor higher high, given a nice positive cross. But right now, the line of least resistance is definitely lower. But I'm thinking that 200-day moving average should provide excellent support for the stock.
Hey, Matt, with MACD, do you care if it's above or below 0, or do you just care about the crossing?
No, I care about the crossing. But what I do like to see, okay, and this which gives us some potential here. See how it's I talked about higher highs and higher lows. This would be, if it crosses up here, it will cross at a higher low. You like to see that. That's bullish. And so you get above $4 and you get a positive MACD cross. That's going to be a sign that I'm wrong and that the stock is really starting to do better. That's the long term. It's the weekly chart. It's not turning up, but that's not really very compelling right now.
All right. Lele wants to know about Nikola. Lele, did you catch the joke about Nikola earlier? No offense to the fine folks at Nikola. Strong, trustworthy brand.
What was the joke? I
kind of forgot. No, some guy was talking about how he's never going to have his cars up on a hill without a motor and just pushing them down a hill. We're like, all right, well, that's a vote of confidence. I'm going to buy 1,000 shares right now.
Well, today they had some of the smartest venture or clean energy people in the world. Jeff Ubben talking about this, and he was very bullish. It's probably why the stock was so strong today. He's from
talking about Nikola specifically, or talking about hydrogen fuel cells.
well, hydrogen fuel cells, but I think he was talking about Nico. I'm pretty sure he talked about that as well.
Okay.
But you have to double check on that. But look at this here. I'm trying to look at it again. We're going back to a trend line. Whoops. Well, I lost it there. But if you saw it there for a second, it got right up against. It is basically now, even though it looks horrible, it's looking down. Look at that. It's coming off a very oversold level, right? And it's testing its trend line going back to last June, almost a 1-year trend line. So if it breaks above that, it's going to give some people going to feel pretty good about the stock.
Are you a Nikola bull right now, Matt?
I am just saying that the stock is washed out, and I don't want to say washed out, but it is down a lot. Let me just look at the weekly chart. It's not crazy washed out, but boy, its daily chart is getting. I wouldn't want to be short this stock. I'll tell you that right now. I definitely wouldn't want to be short the stock. And if you break above $12, you want to be looking now. That's the weekly chart because I don't want to confuse people. But here's the daily chart.
Yeah, Stephen, this is NKLI Nikola.
And look at this. It's a solid. Now, really, to get firm confirmation, it's going to have to make a higher high above those late March highs. But that's on a percentage basis. That's a long way from here. I just love this move right here. It got very, very oversold. It's the most oversold it's ever been on a short-term basis. So this stock, for short-term traders anyway, looks like it's going to go. I can't say it's going to go back up to $80 by any stretch of the imagination, but it does. It is getting quite oversold. Now, of course, the one thing we worry, well, I don't know if people who have been watching this all day, if they heard the news about President Biden, who is going to, the market got hit today because he said that he would, he's going to raise the the capital gains. It's something they've been talking about for a long time, but he's using the top end of the range. This stock is, again, you'd have its recent low as your stop. But this one, I think, for people who want to are willing to take a little risk, this one could be a good play.
There you go, Lele. This shape. There's a lot of stocks right now that kind of look like that are very popular on the internet.
You use that $10 low. You use that $10 your stop. You lose 10%, but do not 10% and move on. Don't worry about it. You're going to have losses. But boy, this thing could easily. I mean, I don't want to get too bullish because I'm worried about the way this capital gains thing may happen. Because if Bitcoin gets hit, a lot of these names get hit. But this stock's already down. You're going to be up 30%. This thing could be up 30% a week, easy.
Layla is all in. All right, so there you go. You should be able to sleep pretty well tonight. What do we got up next? Let's take a look at PSFE.
Okay.
Papa Salmon, Father Energy.
Okay. Now here's one. The one thing that's hard when it comes to technical analysis is when you have a stock that hasn't been around that long. Okay, and this stock's only been, it's not even a year, not even been around for a year. But at the same time, let me just get rid of this. These moving averages, it doesn't even have a 200-day moving average because it hasn't been trading for 200 days. But again, you see these higher lows. Lower highs, lower low, lower high, lower low. Now, right here, let's look at it on a closing basis. I just want to check one thing. Oops.
So you've got bar charts and you're switching to a line chart, right?
Yeah, I'm going to switch to a line chart just because on the closing basis. Yeah, it did make a lower low. So this is not, you're going to really have to see that move above 14 before you really feel confident that this thing is changed its trend line and it's changed its trend. I'm sorry. If you enjoy it, it's something, again, you can play this thing where you say, geez, I'm going to have, right here at the closing base is $12.83. That's going to be my stop out level. It gets below that, I'm out. It breaks above 14. You nibble a little bit here, you breaks above 14, you add to it because the stock is going to go to 16. Now that's $2, but if it's $2, $2 move in Tesla, that's not a big deal, right? $2 in this stock, that's 13%. Boy, it's going to get there quickly. That's a nice single. We're always looking for the home runs. I'm looking for that one where we get, Viacom where it loses, where we make 60% in just a few days, or 250%. Sorry, 500% in just a few days in the options. This one is going to be but 13%. That's a nice single, and you're looking for singles, doubles, and triples all the time. And you can even look at this one. I just want to see what the options. I doubt yet. They're more liquid than I thought. So again, if you like them and you want to look at a $15 call out in May, you might even look at that if you want to take that price. But if it breaks above 14, then you start. Maybe you look at the $16 calls, maybe even going out into June. $16 calls, 39 cents right now. You break above 14. By then they'll cost a little bit more, but it should be a quick hit. And they're more. I must admit, these options, they're not wildly active, but it's not like they're incredibly thin. You can make some money there.
All right, let's look at let's do genomics, BNGO. I haven't looked at any of the genomics stocks for at least a month, pretty much since ARK ETF started crapping.
Which one you want? What's the stock?
BNGO. BN. Benjamin, Neil, Gary, Oscar.
Wow. Okay. Now, look at this stock. Now, this is let's see how far back it goes. Okay, good. Great. So here's a stock. One thing I'm going to do first, so I can help people a little bit, we're going to take away this great move it had because it skews some of the other moves. Okay, this is why I want to show it. But see, when this stock got oversold down here, and it's got very oversold. It did get a little more from before it took off. That's something wasn't happy here. I don't know what happened there. But again, it got oversold here. Now this looks like, well, it only went up a little bit. Well, if you look at a long-term chart, but again, if you look at the percentage move, bang, it doesn't look like much, right? Thank you very much. 365% move. All right, that's a great move. So stock. Let's go back to the 2015. How you doing, everybody? Go ahead. Oops. BNGO.
Sure, your IT support's making a lot of noise back there, man.
I know. I'm sorry about that. Okay, we go back to this RSI chart, but look at this thing. Look at these moves. Every time it gets down, right here. Again, remember this one? It's a huge move I just showed. Okay, this thing. Look, there's a reason this thing got a big move here. Again, we want to see, well, that's the 100-day moving average. You break above $7, this thing is going to run, okay? So let's see. It trades 74 million shares today. Well, there must have been news on this thing today. What happened? 74. So there's a liquid stocks. 10%. Boom. Okay, so there's news out in the stock, okay? I don't know if you can see that there. Raises 10% on positive study results for Sapphire System. So that helped the stock rally a huge amount today. The question is how much farther can it go? We'll probably see it pull back when it sees a big move like that one day. Just experience tells me that it's not going to see that immediately the next day. Oh my gosh! But the point is that what happened there? But the point is, go back to it, I apologize. Again, we have this, lower highs, lower lows. If you really want to be the technician, most technicians will say you got to see it jump above $8 before you're really going to like it and get that higher high. The thing I like, though, is that it made a lower low, but only a slight one. If you break above today's intraday highs, okay, which is $6.95, again, you go above $7, this is going to catch that again because it's coming off that oversold condition. It's going to catch a lot of that momentum money, and there's going to be momentum money in there that doesn't even know what the stock is, what it does, or anything about it. But they see the breakout, and the money comes piling in, and it's just amazing what that can do. So that's what I'm looking at now. You can see the stock did rally almost to $7 today and gave it all back by the end of the day. So we got to be careful on this one. But a break above 7. So you're going to wait and say, well, geez, if I buy it now and it breaks above 7, I'll make a much bigger. When you have a situation like this, if you believe in it long term, that's great. I don't know the real fundamentals behind this one, so I can't talk to them. But on a technical basis, this is one where you really want to be. You want that confirmation, and when you get that confirmation, like you got over here, see it made that big high like that, and it came back down and it broke again. Well, guess what happened? Okay, what's the percentage move here? Bang, 100, and over almost 120% in 2 months. You doubled your stock. So you actually bought it over here because that's when it broke back above that level. But 117% in 2 months. And that's what we're looking for here. It probably settles back in a little bit. If it breaks above that seven level, it's going to shoot. So that's what we're looking at, that one.
All right, that's one for the watch list. I've got one here that I do not know. QDEL. QDEL.
All right.
And then after that, we'll get BE. So QDEL.
Okay, QDEL. Okay. Manufacturers design, you can say healthcare products and solutions. So you get an idea what that is. So people who don't know it, at least get an idea what the company does.
Mm-hmm.
Okay, now this is what I love to see. I can go back a little bit of ways. You always want to go back if you can. I mean, some stocks haven't done it, but here, look at this huge move it's seen. Okay, now let's get rid of some of these lines. So clutter up the machine a little bit, but there we go. Okay, now, okay, we don't boom lower high. Didn't make a lower low, but it did make another lower high and then a lower low. But what I'm looking at now, because it's down so much and it's been going down for a while, even though it's had some wild swings, let's look at the weekly chart. Okay, it's not extreme. It's not extreme. So this is one. You can see it doesn't really get down to its 200-week moving average. Okay, but we see what it got here, and when it got its 200-week moving average got down to these levels, it saw a big jump. And again, because of this stock on the right-hand side, it doesn't look like that much of a move. But if I zoom in, shoot. But these percentage moves are much bigger than they look. I mean, shoot. My ball, I get that. There we go. Yeah, but you can see that you really want to see that RSI get down a little bit lower before you really buy it. Here we go. There we go. So there, stock was trading at 13. It doesn't look like much of a move, right? But it went to 26. It doubled. It doubled. Okay, and just in 3 or 4 months, it doubled. Same thing happened here. Okay, it doesn't look like it went too much. Okay, it was down to $44, 68, 50% move in a month. 50% move in 1 month. That's a triple. Okay, that's a nice, we get doubles and triples, singles. That's a real nice one. It's not quite down there yet. And so my thinking is like it did on several other occasions, it's going to get close to that 200-week moving average and probably get down closer to, 110 before it really sees a bottom. So again, that's one we really got to watch. You like to see it more washed out than it is quite yet. And you can see the wild moves it sees. It can be really, it can rip your face off. So you need to be careful.
So this is a wait and see. You don't have to have a
no.
We got to see what the chart does.
And that's so important in investing and trading. You just sometimes it's like you can't force it. You can't make it happen. All right, so and if you miss it a little bit and it gets back above that 150 level, then you can buy it. It's like, oh geez, you'll miss some, but you're not gonna get, you're never gonna buy. If you buy something on the absolute low and sell on the absolute high, you're lucky. And I don't care if you are the greatest trader in the history of the world. That's still luck.
Yep, I like to say there's always better opportunities elsewhere. Let's take a look at BE.
BE, Bobby Edward.
Bobby Edward.
And I just like to pull up so people can see.
Energy? So clean or dirty?
Utilizes fuel cell energy to generate electricity.
Hydrogen? Gas of some type?
Yeah, this is a bit of power generation equipment.
Ah, okay.
Okay.
So
let's see here. Okay. I like this thing that's holding its 200-day moving average. That's the purple line. And again, take away some of these so it's not quite so cluttered up. But here, again, this thing had a nice move. It became very overbought. It's kind of sold off. It's worked off all that oversold condition. It's not as oversold as it was here, but as you can see, it doesn't. This is not a stock that gets extremely oversold. It did well. It did at one point. This is again. Look at this. It got absolutely killed. But we've seen bottoms here, here, here. I'm not worried that it's not incredibly oversold. I love the fact that it's holding its 200-day moving average. See how it held it there? It got very close to it. There it held. It broke below it, but only slightly so. So I'm looking at basically above today's high. And again, I could draw a trend line. It's broken above its trend line. But when I go to the just the straight line chart, let's see where the next higher high is going to be. Again, higher lows, higher highs. Can't say that much. I mean, you get above 25, that's going to be bullish, and you get above here, that level right when we change from the month to month. That's at $27. Then you add to price. Then you add to it there, because then you get a successful. And you get the confirmation. You get the successful hold of the 200-day moving average. You get a minor higher high, and then a more important higher high. Then you can really get more aggressive. So nibble above 25 was what I would say, and then get more aggressive above 27. And no, you won't make as much if you buy it all here. But if you buy it all here, it could go to 20.
Beautiful.
That's what we're looking for. To manage our risk.
We got about 3 minutes left here. I want to talk a little bit about your trade idea subscription, which is Benzinga stock picks. Just so you guys know, Matt Maley does have a subscription service where he provides his stock picks, his technical analysis, and ongoing education. I'm going to drop a link in chat right now. While I'm doing that, while I'm working on that, Matt, would you be so kind as to take a look at VXRT?
Okay, I'm going to look at a couple different things before I make a comment. So it looks pretty enticing, but okay, not oversold. Okay, and back to the daily. And I'm going to put up a MACD chart. Well, I mean, gosh, the great thing about this stock is it just doesn't want to break below $5. So I mean, usually you'd say. It did break here, but literally 3 days. It spent 3 days below $5. That tells you that the buying interest is very and ridiculously strong at that level. You got somebody who it's probably some big hedge fund who really understands the stock, who thinks it's a long-term buy, but and he just stands there and buys it every time it gets below $5, or it gets to $5. So we don't need to go. Let's go back here to one you can see a little bit better. There we go. Again, I'm going to get rid of some of these. Again, obviously, if you want to play it safe, you wait for a break above the 200-day moving average. But that's way up. That's up at $7.50. But I just think you have a very strong support level here at $5. If it breaks below $5, again, that'll be actually a little bit more than 10% loss. But if it breaks below $5, you stop out, you walk away, and look for another time. But again, this is a situation where it got up to its 200-day moving average, but not for very long. Got down below it, got above it intraday, couldn't hold, got below it. So if you like it here, and it's obviously getting a nice little bounce here, and it's coming off. It's not wildly oversold, but it's coming off an oversold level. So you nibble a little bit here, you break above 750, that 200-day, it's going to run. So that would be, again, the one thing I like about this is the battle lines are well defined. We have the downside of 5, that's our stop out level. If we add some here, our next level is to add is at 750, and then you just let it run.
I love that point that you just made about appreciating that your support and resistance lines, or your battle lines, as you've called them, are well defined. A lot of times we get requests for stocks that are just totally wonky, and it's sort of people sort of chasing the FOMO of like a huge move that has happened, and it's really hard to see because they're so erratic, and it's pretty clear that they've got some pumping action, or some like recent parabolic action. One last one, because this person said please, not once, not twice, but 3 times, and spelled it PLZ. So I'm assuming they are a 12-year-old in the year 2008, using a Nokia. The ticker is OZSC.
So this is Ozop Energy. Is that right? I've never
I don't
heard.
know. I've never heard of them.
It's all right. That's all right. Okay, just to put up, I don't know if you can read that, but it's a designs, manufactures, and distributes power electronics, offers battery chargers, power suppliers, blah, 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 blah. Service customers worldwide. Stock traded 18 gazillion shares today, 230 million shares, and that's probably because it's an 11-cent stock. 11
Oh boy! All right, let's go.
That's safe. Believe me, those times can be, the penny stock sometimes. Oh boy. Let's see here. We can. Hey, if like I said, if I don't have a good answer, here's a stock that traded at 2,000. Is that right?
Dude, I get people ask for these stocks all the time, and I don't know if it's because stock split data isn't incorporated into the
maybe that's it. Yeah,
that's the only answer I can come up with.
Yeah, that's kind of crazy. But let's narrow it down here to a more near-term situation, and we'll get rid of
because all you can do is ignore like when it was apparently $5,000 a share.
Yeah. I mean, it's, did the news come out in the stock? I mean, the thing you get worried about is like, have I already missed it? I mean, but you could.
I'm gonna check Benzinga Pro on this one and see if there was news.
Up 100.
Go ahead, keep going.
Well, it's up 142% in 2 days. Could it go higher? Sure. It was oversold, but it's.
It could just mean that someone with a Lamborghini tweeted about it.
Yeah, I again, if strictly looking at it, if it gets above 20 cents, that'll give it a higher high. But this is just tough. You're gambling on this one. I'm afraid it's just tough to. And there's nothing wrong with penny stocks and going for broke, but only invest money you can afford to lose. The same thing with options. Never invest in options more than you can, when you can lose 100% of it. And if you're not afraid of that, go ahead.
What was the date of the big I almost called it a pump, the big spike in the price?
You mean the recent one, or?
Yeah, the recent one.
Literally the last 2 days. The last 2 days. So
okay.
Yesterday would have been the news probably.
I got April 22nd. We got a press release about a distribution deal.
Yeah.
So there you go. All right, we are at time. We're over 3 minutes, guys. If you want to get more education with Matt Maley, it is a 14-day, no risk, money back guarantee. You got to be crazy not to check him out. Go ahead and click the link in the chat to get on over there. It is on sale just for you. It is an annual subscription for less than the price of a Disney Plus subscription. You can't beat it. Matt, thank you so much for being here with us today.
Thank you, Neil. I mean, it's like the whole idea is that hopefully I'm providing stuff. On my tier 3, I get three calls a week, and we update our picks all the time. Not just like some of these other guys that just throw a pick out there and then they tell you when to sell it. We're updating it. We don't update every pick every week, but we talk about several picks at different weeks, every single time, 3 times a week, and we talk about education. And the whole idea, of course, is that you make enough money several times over to more than pay for the subscription.
Earn while you learn. All right, thank you, Matt. You've been fantastic.
Thanks, Neil.
All right, guys, I'm here for my obligatory 1 to 2 minutes. Maybe more, to answer any questions that you have before we close this event. Do you have any questions for Neil about Matt Maley's subscription or anything else that I can answer for you before we bring this wonderful conference to a close? P, hey, no problem. OZSC, I would say that one, I think that's an attractive stock because it had recent really big moves. But you want stocks, especially as a beginner, that have consistent growth going in a certain direction. It's much easier to trade than those stocks that are just like kind of crazy like that. Once you get more used to using tools like Matt, then you might be able to play around with those. But honestly, there's a lot more risk there and a lot of uncertain reward potential. Lele, thank you. I hope that today has been good for you. I hope you guys all learned a lot and got to hear from some companies that you wouldn't have otherwise really looked into. I know that it was a really educational, edifying day for me, learning what's going on out there. I didn't know what PEA was. Now I know to look for that in my mining companies. Night, Lele. See ya. What would I recommend? P? Well, we don't give stock recommendations here, but as a beginner, I would just look at stocks that you know. Look at companies that you know. If you've never heard of it before, think about companies that you know. You probably know Apple, Microsoft. You probably know Netflix. You probably know, gosh, you name it. Almost everything around you is produced by a publicly traded organization, publicly traded corporation. Look to those stocks that have been around for a while. Look at the car companies. Look at some of the great stocks we talked about today. Look at Tesla. Tesla is quite erratic, but it's a lot better than the one that we just had on there. Yeah, things you own, names you know, invest in names you know. That's an old school adage that holds true and probably always will. Don't worry about spelling my name right. It's all good. Yeah, Apple is looking loaded up for a run. I'm with you on Apple. So with you on Apple. It's time. I'm so disappointed in the recent announcements, though. I think the products are so lame and they're just doing us dirty. But as an investor, I'm pleased. All right, guys. Doesn't look like we're getting many questions here. So it is my honor to thank you all for joining us for our first Cleantech Small Cap Conference, presented, as you know, by Benzinga. I'm Neil Hamilton, and I'll see you all next time. Happy trading.